Okay, the indifference point, indifference level. Indifference point in the sense, simply we can say EBIT level which the earning per share is same for alternative financing plans. Okay, simply at the end of this session, I will explain why we are calculating this, what is the actual advantages of calculating this. I will explain. Now, simply I will explain the term EBIT as I explained. EBIT in the term indifference level or indifference point in the sense EBIT level which the earning per share is the same for alternative financing plans. Okay, as an example, let's say financing plan. Okay, financing plan. Let's say we should have 100,000 rupees. Okay, this one can have by issuing 1,000 ordinary shares at the rate of rupees 100. Okay, this is one finance plan. Then second finance plan is for this 100,000 rupees. That means capital requirement is 100,000. Yani capital requirement එක අපි එකතු කරගන්න ඕන රුපියල් ලක්ෂය. ඒ ලක්ෂය එකතු කරගන්න පුළුවන් එක විදිහක් තමයි රුපියල් 100 සාමාන්‍ය කොටස් 1000ක් නිකුත් කරන. Second one I am suggesting 500 ordinary shares at the rate of rupees 100 and issue debentures valued rupees 50,000 rupees. Interest rate is 10%. රුපියල් ලක්ෂයක් එක්ස්ප්‍රෙස් කරගන්න යන්නේ ලක්ෂයක් රැස් කරගන්න අපේ අවශ්‍යතාවය capital requirement එක ප්‍රාග්ධන අවශ්‍යතාවය ඔය ලක්ෂය එක්ස්ප්‍රෙස් කරගන්න පුළුවන් ප්‍රධාන ආකාර දෙකක් මම යෝජනා කරලා තියෙනවා එකක් තමයි රුපියල් 100ේ කොටස් සාමාන්‍ය කොටස් 1000ක් නිකුත් කරන්න පුළුවන් අනිත් විදිය තමයි රුපියල් 100ේ කොටස් 500ක් නිකුත් කරනවා ඒත් එක්කම ණය කර රුපියල් 50000ක නිකුත් කරනවා 110ක පොලිය යටතේ. Okay, now if our earning before interest and taxation equals to rupees 100,000. අපේ earnings රුපියල් ලක්ෂයක් වුණොත් එහෙම. ඒ කියන්නේ earnings before interest and taxation. පොලී සහ බදු ගෙවන්න කලින් ලාභ. How much will be the earning per share? Earning per share. How to calculate earning per share in this particular case? Let's say point 1. Case 1. Plan 1. පළවෙනි plan එකේ මොකද්ද EBIT දීලා තියෙනවා. First you try to calculate. I will give 1 minute. Try to calculate. Here we have been given earning before interest and taxation. Okay, earning before interest and taxation. Then earning before interest and taxation rupees 100,000. Without having zeros, I will put 100. Then we need to pay interest. In first plan, we no need to pay interest. We are not having any debts. Okay. Then we can get earnings before tax. In this particular case, we are not having taxes even. Okay, so earning before tax will be equals to earnings after tax because no taxes. Okay, then our earnings 100, then no dividends for preference shareholders. Then here we can calculate earning per share equals 100 divided by, we are having 100,000. Okay, 100,000 divided by, we are having how many shares? 1,000 shares. Okay, then earning per share will be 100. Then let's say second case, that means second plan, EBIT 100, we need to pay interest. Interest will be 50,000 into 10, that means 50,000 into 10%, 5,000, deduct 5,000, then that is answer. Earnings after tax is 95 because we are not having any taxes. Then we can calculate earning per share 95,000 divided by, here how many shares we are having? 5,000 shares. Okay, not 5,000, 500 shares. Then earning per share is how much? 190. Okay, you noted that under same EBIT level, two different financing plans have got different earning per shares. එකම ඉපයීම, එකම පොලි සහ බදු පෙර ලාභය, නමුත් ෆයිනෑන්සින් ප්ලෑන් එකෙන් ප්ලෑන් එකට අපේ earning per shares වෙනස් වෙලා තියෙනවා. One point is there, if we draft this case like this, we can have earning per share for y-axis and EBIT level for x-axis. If we draft the two cases like this, then එක එක ගණන් එන්නේ. දැන් මේ A, you can have B like this. For different level of earning per EBIT, earnings before interest and taxations, we may get different earning per shares. Okay, but one particular point we can identify, earning per share of both of the financial plans becomes equal. That point we can identify as indifferent point. Indifferent point. Actually, we know that as this. Okay, here we are considering two financing plans. Among those two financing plans, already it is clear we are going to have different earning per share figures under difference of different EBIT levels, as I proved here, there is a one particular point, earning per share of both of the financing plans becomes equal. That particular point be known as indifference level. Indifference level. I will explain the advantages, uses of these analysis at the end of this session. So first of all, let's see how to calculate this point. Calculate. There are certain things we can predict through this indifference point. Okay, I will come to that part at the end of the session. Now, in this moment, we are going to measure, we are going to calculate this indifference level. The EBIT level at which the earning per share is the same for the alternative financing plans is refers to the indifference point. ඒ කියන්නේ අපි indifference point එක කියලා ගණනය කරන්නේ මම දැන් මෙතන පැහැදිලි කරා වගේ විවිධාකාර වූ ප්‍රාග්ධනික මූල්‍යකරණ ක්‍රමයන් අපිට පාවිච්චි කරන්න පුළුවන්. සාමාන්‍ය කොටස් විතරක් නිකුත් කරන්න පුළුවන්. සාමාන්‍ය කොටස් සමග ණය කර නිකුත් කරන්න පුළුවන්. සාමාන්‍ය කොටසුයි ණය කරයි වරණීය කොටසයි තුනම නිකුත් කරන්න පුළුවන්. බද්දට යටත් වෙන්න පුළුවන්. සමහර අවස්ථා බදු නැති වෙන්න පුළුවන්. ඒ වගේ අවස්ථා තියෙනවා. withholding taxes ගෙවන්න වෙන අවස්ථා තියෙන්න පුළුවන්. It depends on the particular finance plan. A financial plans යටතේ අපි අනුගමනය කරපු අපි ඇඩැප්ට් කරපු financial plan එක යටතේ EBIT එකක් අපි earn කරයින් පස්සේ අපිට යන earning per share එක අපි ඇඩැප්ට් කරන financing plan එකෙන් plan එකට වෙනස් වෙනවා. දැන් මෙතනම පේනවා ලක්ෂයක් අපි EBIT earn කරා ණය අරගන්න නැතුව හිටියනම් earning per share එකෙන් සාමාන්‍ය කොටස් විතරක් නිකුත් කරපු අවස්ථාවක earning per share ආවේ 100යි භාගයක් ordinary share වලින් ගිහිල්ලා භාගයක් ණය නිකුත් කරාම ඕක ආවේ 190. ඒ විදිහට plans දෙකකදී finance plan දෙකකදී එක මට්ටමක් තියෙනවා. ඒ කියන්නේ එක EBIT level එකක් තියෙනවා. ඒ level එකේදී indifference ඒ level එකේදී earning per share ඔය දෙකේම සමානයි. අන්න ඒ level එකේ EBIT තමයි අපි හඳුනාගන්නේ indifference level එක කියලා. I think you got the idea. Now let's see how to do this in graphical. How to do this? How to show this graphical? අපි බලමු කොහොමද මේක graphically present කරන්නේ කියලා. Okay. Here in this particular case, you have been given different EBIT levels under different plans, 2 different plans, and earning per shares belongs to that EBIT levels also have been given. ඔයාලට දීලා තියෙනවා EBIT levels එක එක plan එකට අදාළ EBIT ඒ EBIT එකට අදාළ earning per share එකක් දීලා තියෙනවා. plan එක මොකක්ද කියන එක දීලා නැහැ. අපි දැන් මෙතන පෙන්නන්නයි යන්නේ. Now let's say y-axis as earning per share rupees. Taking a okay. 1, 2, 3, 4, 5, 6. X-axis you can see. Let's take a x-axis as EBIT level. EBIT level. Let's take here 0. 120. I am doing writing without 3 zeros, without having last 3 zeros. 240, 360, 480, 600, then 600, 720. Okay. Now let's check. First point, when EBIT become plan here, when EBIT becomes 360, earning per share what? 361. This is first point. When EBIT becomes 600,000, earning per share 3. මම point ලකුණු කරගෙන පස්සේ අඳින්නම්. Plan B, when EBIT level becomes 360, earning per share becomes 2. When EBIT becomes 600, earning per share 4. I'm gonna 4 දාලා හරියන්නේ. අපි මේ දෙක මාරු කරමු. Okay, let's revise these two. Here let's consider as 4 and here end on. Okay. In first one 361, then 604. $600. Yes, it can be. අපි මෙතන දැන් අර graphical එකක් නෙන්නේ. අපි ඒක අදහසක් ගන්න අපි මෙතන අඳින්නේ. Okay, it's like this. Now this is plan A, this is plan B. In this point we can see earning per share equals, earning per share becomes around 2.5 in both of the plans. At that point, EBIT level we can identify as 480,000. This is the indifference level. This is the indifference level. Okay, now let's move. Example. X Limited is considering 3 different plans to finance its total project. Total project cost 100,000. They are going to collect 100,000. Okay, from different sources. They are having 3 different plans. Okay, then plan A issuing 50,000 equity shares, 50,000 worth of equity shares and 50,000 worth of debt. Plan B issuing 34,000 worth of ordinary shares and 66,000 worth of debt. Plan C issue 25,000 worth of ordinary shares, 75,000 worth of debt. Here, sales for the first year of operations are estimated at rupees 100 and 10% of profit before interest has been forecasted. 10% profit in the sense 10% from this sales. Okay. Tax rate is 35%. Compute the earning per share each of the plan. මොකද්ද කියන්නේ? මේ රුපියල් ලක්ෂයක් earn කරන්න එයාලගේ plan තුනක් තමයි මේ තියෙන්නේ. එකක් තියෙනවා සාමාන්‍ය කොටස් 50,000 නිකුත් කරලා ණය කර 50,000ක් නිකුත් කරන්න. plan B එක තියෙනවා 34,000ක් සාමාන්‍ය කොටස් නිකුත් කරලා 66,000ක් debentures නිකුත් කරන්න. plan C එක තියෙනවා 25,000ක් සාමාන්‍ය කොටස් නිකුත් කරලා ණය කර 75,000ක් නිකුත් කරන්න. එයාලගේ පළවෙනි අවුරුද්දේ ඇස්තමේන්තුගත විකුණුම් රුපියල් ලක්ෂයයි ඒකෙන් 110ක් ප්‍රොෆිට් එකේ කියලා ප්‍රොෆිට් බිෆෝර් EBIT ඒ කියලා යාලා ප්ලෑන් කරනවා ටැක්ස් රේට් එක 135යි earning per share calculate කරන්න කියලා කියනවා. You are required to calculate the earning per share. Okay, I will give 2 minutes. Try to do. Okay, I will do the calculations. Check whether your answer is correct or wrong. Here we are having 3 plans. First I will do the calculations for plan A. Okay, sales value we have been given 100,000. Then we can calculate EBIT level. EBIT 10% of this, then 100,000. Then see at the higher 100,000 into 10%. Then EBIT is 10. Then We need to pay interest. Let's pay interest. Interest in this case, 50,000 into 10%, that means 5,000 per year. Then we can get earnings after, earnings before interest, before tax. Earnings before tax. Let's do. Earnings before tax. Then we need to pay these taxes. Here interest 10%. Here taxes 35%. 5,000 into 35%. 1.75. Then our earnings after taxes would be 3.25. Okay. Then we need to calculate the earning per share. Here we are not having any preference shares to pay dividends. So we can calculate earning per share. Earning per share equals earnings belongs to ordinary shareholders divided by number of shares. Here, as we are not having any preference shares to pay dividends, this amount, that in the sense 3,250 belongs to these ordinary shareholders. Here we are having 50,000 worth of ordinary shares. Value of ordinary share is 100. That means we are having 500 ordinary shares. 500 worth of ordinary shares. Okay. Then we can deduct this by 500. That is the number of ordinary shares. Then we can get earning per share 3,250 divided by 6 rupees and 50. 6.5. Then plan B. Sales 100. That means simply EBIT becomes 10% of sales. Then interest we can calculate 66,000 debt, 10%, that means 6.6. Then earnings before tax 3.4. Then based on that, we need to pay taxes. 3.4 into 0.35, 1.19. Then earnings after tax 2.21, that means 2000 and 2210 divided by, here number of shares how much? Here number of shares 34,000 worth of shares. Let's divide this by 100, that means 340. Then earning per share 2210 divided by 346, same, rupees 6 and 56. We are getting same answer. That means this level is the indifference point in case of this particular two plans. මේ plan දෙකේ ගත්තොත් එහෙම ඔක තමයි indifference point again. Earning per share සමානයි. Okay. Here we are having plan C also. මතක තියාගන්න plan C තිබ්බට තුනක් එකතු කරන්න බෑ. මෙතනින් දෙක දෙක අරගෙන තමයි අපි ඔය calculation එක කරන්නේ. Okay. Here 75,000, that means 7.5 is the interest. Then we can have earnings before taxes 2.5. Then let's pay taxes 2.5 into 0.35, 0.875, 0.875. Then answer 1.625, 1.625. Then let's calculate 1625 divided by, here number of shares 250. $6.5. Okay. Here these answers are not equal always. These are changing. Only one point is there. This answer becomes same. That is the indifference point. Here I have selected the indifference point in this particular exam. Okay. සමාන වෙන්නේ නැහැ හොඳේ. නැත්තම් හිතයි සමාන වෙනවා කියලා. ෂුවර් නැත්තම් අරන් බලන්න ඕන නම් එකක්. Let's say if EBIT let's say 12.5, then A, EBIT 12.5, then interest 5, interest එක ඒ ගානමනේ, then earning before tax 7.5, then we need to pay taxes 7.5 into 35%, 2.625, then earnings after tax 4.875. Then we can have the earning per share 4.875, that means 4,875 divided by 500. Plan A, answer would be 9.75. නෑ ඕකම B එකෙත් අරගෙන බලමු. නැත්තම් ඕක පැහැදිලි නෑනේ. 12.5. Then here we can see expense definitely interest should be 6.6. Then earnings before tax 5.9. Then we need to pay 35% taxes 2.065. Then earnings after tax would be 3.835. Then 3,835 divided by here 340 shares, no? Then answer would be 11.28. Okay. Normally we are getting different values. Only one point is there. We are getting same earning per share. That is known as earning per indifference point. Okay. Okay, take this. I will give 2 minutes. If you have any doubts, you can ask. Okay. Now I am giving you a activity. Okay. Now my question is, let's say we are having a finance plan. Total capital requirement rupees 100,000. Okay. Now we have issued ordinary shares thousand at the rate of rupees 50, and we have issues debentures ₹50,000. Interest rate is 10%. Now if EBIT equals to X, if EBIT equals to X, what will be the earning per share? Take 2 minutes and try to do this. Here, first one, total capital requirement 100,000, ordinary shares 1,000 ordinary shares at the rate of rupees 50, debentures 50,000. Now I am asking, when EBIT becomes X, what will be the earning per share? So what we need to do, we need to deduct, if the earning before interest tax is X, we need to deduct interest from that one. Interest is 5,000. Then divide by the number of shares, 1,000. That's what we got this answer. Now I am asking, all other factors are same as one. That means practice 1. If we are having tax rate of 35%, then how to do this? Then simply what we need to do is earning per share equals x minus interest 5,000, then into 1 minus t, tax rate 0.35, okay, divided by number of shares 1,000. Okay, I think you got the point. If you have any doubts, you can ask. Then next one. So can't understood that point. දැන් මෙතන 135ක් ටැක්ස් ගෙවනවා. හරිද? 135ක් ටැක්ස් ගෙවනවා කියලා කියන්නේ ඉතුරු වෙන්නේ කීයද? 165යි. හරි? එතකොට ඉතුරු වෙන ටිකනේ ෂෙයා හෝල්ඩර්ස් අතර බෙදලා දාන්නේ. Got the point? We are paying 35% as taxes. Okay? So what we can do from x is DBIT, we can deduct 5,000. Okay, then මේකෙන්නේ දැන් මේක තමයි බද්දට යටත් ලාභය, earnings before tax. මේක තමයි earnings before tax. From this we need to pay 35% as taxes. මේකෙන් tax එකක් ගෙවන්න ඕනේ 135. මේකෙන් tax එකක් 135ක් ගෙවනවා කියලා කියන්නේ tax ගෙවුවට පස්සේ ඉතුරු වෙන balance එක. After paying the tax, our balance would be x minus 5,000 into 65%. No? That's what I heard it. Here 1 minus t. Here 0.35 in the sense t. Got the point? තේරුණාද? Okay. Now third one. Capital requirement of capital requirement let's put 100,000. Ordinary shares we are issuing 5,000 ordinary shares at the rate of rupees 100. Preference shares here 500. Okay, ordinary shares 500 at the rate of rupees 100. Preference shares 250 at the rate of rupees 100 here, dividend per share rupees 10. Okay. Then debt, debentures, 25,000 rupees, interest 10%. If EBIT equal to X, what will be the earning per share? Try to do this. Okay, I will do. Here, EBITX, yes, one has EBITX. First of all, we need to pay interest. Interest in the sense, here 25,000 into 10, that means into 10%, that means 2,500. Okay. Then we need to pay taxes. Tax them in. Let's put taxes also. Api tax එකක් දාමු. And here tax rate 35%. Okay. Then here, after paid interest, we need to pay taxes. Then 1 minus into 1 minus t in the sense 0.35. Then this is the amount available after paid interest and taxation. That means earnings after tax. From here, from this amount, we need to pay dividends for preference shareholders. We are having issued 250 preference shares. We need to pay 10 rupees for each. Then 250 into 10, 2,500 need to pay as taxes, not dividends for preference shares. Then balance part is the amount belongs to ordinary shareholders. When we are having 500 ordinary shares, we can distribute that among ordinary shareholders. Okay, that's all. If you have any doubts, you can ask. Now, why I did this? Reason for doing these practice questions is this. I told you indifferent point in the sense the EBIT level which generate same earning per share for two considering financing plans. Okay. So in calculating indifference point mathematically, we can use this rationale. What we are doing, just we assuming that EBIT level at the indifference point is X, then you know the way of developing an equation to calculating the earning per share. In the indifferent point, both of the EBIT should be equals. So we can equalize both of the equations and we can get the value for X as we did in the demand and supply. How did we calculate the equilibrium? Demand equation we equals to the supply equation, then got the value for equilibrium price and quantity. As like that, by adopting same way, we can calculate EBIT level 2. Here, you can see these equations. What I have did.
Sudu.
Please unmute your mics. Here what I has done is assume that EBIT level here X, EBIT, T in the sense tax rate, N1 in the sense number of ordinary shares, under plan 1. Then when we are having debentures 2 other than equity, we need to pay interest as well as taxes. N2 in the sense number of ordinary shares under plan 2. No need to memorize these equations. Simply now you are having the rationale to develop these equations. Then simply for both of the given financing plans, you can develop an equation to calculate the earning per share, okay, by using the X factor as the EBIT, by considering the EBIT as X. Then as we calculate the equilibrium quantity and equilibrium price in demand and supply, here also we can calculate EBIT level which generates same earning per share. That is the indifference point. Okay. So here I am not going to discuss these equations. Now you should have that rationale. In some cases, we can have withholding tax payments for this, especially in case of preference shares. Based on the scenario, we need to adapt. Okay. This equation, indifference point for existing company. Existing company in the sense, already they may have some debt. So at that point, if they are issuing new debt, they need to pay interest for all debt as well as they need to pay interest for new debt. That's why I1 and I2. Based on the situation, we need to develop our equations and get the value for X. Okay. Now we are going to discuss these things, some examples. Before that, Let's take a break of 15 minutes, only 15 minutes. Huh? Now, in this example, we are having two plans. We are going to calculate indifference point. We are having two plans. Plan one, 15,000 ordinary shares at the rate of rupees 100 each. Preference shares, 12% interest. 25,000 shares, 200 each. Debentures, 500,000 shares at the coupon rate of 10%. Plan 2, 30,000 shares at the rate of rupees 100 each. Then here, 150,000 no. Then here, please check whether the total capital requirement are same in this particular case. දෙකේ සමානයිද කියලා බලන්න. සමානයිනේ. Yes, looks like same. Okay. Now we are going to calculate the indifference point. First, let's develop equations. Just assume EBIT level as X and develop the equations to calculate earning per share. If EBIT equals to X, earning per share. Plan A, plan 1. Here, first of all, we need to pay the interest for this debt capital. That means X minus debt capital interest on debt, 10% in the sense 50,000. Okay. Then we need to pay taxes of 35%. Means 1 minus 0.35. Okay. Then we need to pay dividends for preference shares. Here 12%. That means for per share, then we need to pay 12 per share. 100ට 12යි නේ කියන්නේ 100යි කොටසක්. එහෙනම් කොටසකට 12යි. 12 into 25,000. 300,000 minus 300,000. I think that's all. Divided by number of shares here, 15,000. Plan B. Plan 2. Here we need to pay interest. X minus 15 lakhs into 11%. $165,000. Then let's pay taxes. 1 minus 0.35. Paid the taxes. Give me 1 minute. Okay. Then we need to deduct this by number of shares. In this particular case, we are having 30,000 shares. In indifference point, yes, 30,000. In indifference point, earning per share of plan 1 should be equals to earning per share of plan 2. In indifference point, earning per share of plan 1 equals to earning per share of plan 2. Then, based on that rationale, we can calculate indifference point. As earning per share plan 1 equals to earning per share plan 2 at indifference point here. First one, x minus 50,000 minus 300,000 divided by 15,000 equals x minus 165,000 5 divided by 30,000. Yes, here 50,000. Okay. Now we need to get the values for x. Then maths the. Take the value for x. Some huge calculations can be there, huge numbers. Nothing to worry. Just got the value for x. X value correct.